Bitcoin trading at $48,400. S&P and the equity markets indexes have broken out. If you recall this morning on the live stream, as price was underneath this resistance, we talked about how price was getting ready for its next leg up. We have consolidated beautifully, and we're getting ready now for our next leg up on the equity markets. That has been triggered. That was all triggered by this guy, Jerome Powell. We're going to talk about what happened, what it means. We got a macro episode ahead of us, putting it together better than anybody else. Look at this at oil. This was shared in the Discord this morning. We have a really important session ahead of us here, and we're going to have a lot of fun doing it. If you're new here, welcome. And if you're not, welcome back. This is Jordan with Conquer Trading and Investing. This morning on the live stream, here's the 10-second clip, us talking about how we're looking forward here to Bitcoin. To how do you like that? To Bitcoin, to the S&P over here getting ready to break out for its next leg up. We'll talk about that. We'll talk about what's next. We're going to talk about massive signal today. Signal from this guy over here and what it means for Bitcoin and why Bitcoin is trading off on this news. All right, everyone. Jerome Powell today said a few things, some things that he said, listen, there are some asset prices that are elevated by some measures. I don't know. What do you think that is? Do you think that's lumber? Do you think it's the S&P 500? Do you think it's the price of Bitcoin? Is it the Nasdaq? Is it tech? What do you think that is? Which is it the housing market? He's saying some asset prices are elevated by some measures. By every measure that I look and everyone that I know looks at, they're not only elevated by some measures, they're super inflationary. There's no other way to put it. He says overall it's a mixed picture, adding that the leverage in the financial system is moderate. Is moderate. Any concerns? Can the markets remain irrational longer than... Does it sound like the Fed chairman has any concerns or is voicing any concerns at this time? Now, keep in mind, Bernanke was not able to cause... Headline, the Fed just keeps getting more and more dovish. Whatever preconceived notions Powell had, supposedly Powell wasn't this ultra dove before he took office, right? He's now faced with reality. The Fed has no choice but to be ultra dovish. We already know as rates rise, the Fed's going to step in, and the next step of the Federal Reserve, their tool in their toolbox. We have so many tools in our toolbox. What tool do they have? They could cap the yield. They could cap the yield. They could cap the yield They're going to cap the yields. They're going to use curve control, right? And then that's when we're really going to see two things happen. That's when we're going to see gold and silver really start to run. As much as they're manipulated, they're going to have no choice at that point. And then you're going to see another action coming, just more and more and more printing. That's the signal. That's the main signal that I've had each and every one of you focused on for the longest time, the most important. That's going back all the way. Let's call it, here we are today, and we're going to put that all together in a nice way. I hope you have a minute to enjoy what's being shared here with you today. I hope you're able to use this as a learning experience, as am I. That's what I do when I get in the front of the charts with all of you. I'm learning about the markets, making sure that I stay on the right side of the trade. Now, it was around this time over here. All the videos are on the channel. You could go back. We have the whole collection on LBRY. What is it? LBRY.io. I'm not sure. I'll start linking it in the description below. Anyone wants to watch those videos streaming. Each one of our videos has always been and always will be backed up. Why? Well, we're not going to take any pills right now. We're going to focus on the charts over here. It was in this area. It was very difficult. This was easy. How did I see this coming, by the way the question came up? Because these videos are available if you wanted to go back and take the time, late January, early February, see what we were talking about as we had eyes on the growing pandemic back then and what it was going to do to the markets. We were positioned. Was it price? The question is it price that got me into this trade? I never would have gotten into these trades, by the way. S&P 500 also, this is going to be an important episode. Also, the Australian dollar, Japanese yen, the Australian dollar, Swiss franc, New Zealand dollar, Swiss franc. Those were the trades we were positioned into, along with the short S&Ps. And that was only because of what happened in 2008. during the last crisis. Do you remember when Janet Yellen said in our lifetime, there'll never be another crisis? I remember that. But I've been trading for a long time. I've been trading for a couple of decades now. I remember what this crisis was like. I remember going through this crisis. It was the first crisis that I had been through. Now, I had been through the collapse of the dot-com. I learned to trade, actually, in a massive bear market. That's how I learned to trade. That's how I began trading in a massive bear market. It had been imprinted upon me early what speculation could look like in the dot-com bubble, and then the bust. Back in 2008, I was a very active trader, and I remember I lived and breathed the markets exactly then as I do today. The same exact thing. This is what I do, right? So if I had not traded through that time in history, I really wouldn't have been able to prepare as well as I were, because the question came up. It was asked on Twitter. It was asked on YouTube comments. The question came up, well, how did you get into those trades, right? Was it, and you could go back and you could just look on the videos if you're interested to find out exactly. I don't remember exactly what I was thinking and why, but more than, I'm a technical trader. 100% on the technicals, following price along the market structure of support and resistance with the help of trend lines and chart patterns. It's what I do. I don't look to catch the top of a trend, and I don't ever look to catch the bottom. I say that with a smile on my face, as I did over here, catch the bottom. Took about 6-7 different entries. But the reason I say that with a smile is because that was an abnormal event, right? At that point, I'm trading off of my genuine, let's say, instincts, but it's not instincts, training. The training that I've been through in the markets, having seen these things play out before, that's a large part of that. Me understanding price action, me understanding psychology, me understanding market participants. Nevertheless, that was different. It was different because I realized we were entering a crisis, and I became very clear and very vocal daily. We're no longer looking for swing trades. We're looking for position trades. You're looking to turn those swing trades you got into, which are now falling fastly and vastly into profit. You do not want to take that profit. You want to hold this trade and push this trade. That's the difference between an experienced pro and someone who's learning. But you can't learn. Can you imagine learning here today together? What a beautiful thing. Do you value that? I value it, and I'm the one sharing with you. Either which way, that brings us back to where we are today. Though, guess why I talk about all of that is because since this area over here, this is when we said on the channel, right? After going to the short side, big time, back up. I think it was about 250 and 350 points on the S&P 500. In those areas, I took profit. I took profit because, to be honest, I was scared to hold on to that at that point. I didn't know over here if price was going to come back and test 2,300 or if it was going to go to 4,100. But I said exactly those things. Andreas, if you're watching, you went back and found that and highlighted that. I said it multiple times. That's what could have happened over here. We could have done it. So I took my profit. I made more profit on the way down, by the way, more S&P points than traders make in a decade. And then the same way on the way up. Of course, I took that profit. Happy to do so. It took a while. It took all of mid-April and into May to figure out, all right, we're not going to test back down to the downside. I don't care what those, let's call them traditional finance guys, tell you, that we're not going down. We're not going to down test the lows. And almost every single one of them, that's what they kept looking for. But what happened was a big thing. The Federal Reserve, this guy jumped in with $4.1 trillion in liquidity, flooded the market. And guess what? We had a couple of debates with some other people who were saying that that's deflationary, QE's deflationary. And I was like, no, that's hype. I used the word Uber over and over again. Every time I mentioned it, I said it's Uber inflationary. I didn't say it's inflationary. I said it's Uber inflationary each and every time. That's what we're experiencing now. However, as the Fed, as this guy notices it, this is what he says. This is important. This is the most important signal that we could focus on today. Why is Bitcoin going down is what we're going to answer or look at next. Why is Bitcoin dropping when we just got this enormous big signal from the Fed? And what was that signal? So he says that basically, just to recap, that, look, there's not too much leverage. The leverage is moderate in the system, and asset prices are like elevated by some measures, some of them, but not all of them, right? He doesn't seem concerned at all. He's as uber dovish as could be. He needs to be dovish, otherwise this system falls apart. One of the main attacks that could happen right now, or something to cause a problem, is rates rising. The market's forcing rates to rise as we came into our resistance right over here in this area. Remember, we're expecting price to consolidate and or correct. We're coming into strong resistance over here. Rates have already risen and pretty far. If they break through this resistance, there was a great chart on zero hedge. Hold on, let me see if right over here. No, that's not the one I want to share with you. Let's take another look over here. Let's see what charts we have over here. Okay, we have a lot to look at. If you have a moment, this is the chart I wanted to show you. If you have a moment and you're going to spend the time, this is a classic conquering trading and investing episode right here. By the way, smash the like button if you appreciate what we do and how we do it together. Actually crush the like button. I know you could only hit it once and you would hit it more, perhaps, if you could. You could copy the share as well and go ahead and share that with a friend, someone you know that is into the markets or thinks that they understand the markets. Send them this video. Get them on our team. Get them on our side, because our collective knowledge just continues to rise, and it's literally iron sharpening iron, right? Look, and that was one of the main intentions when I first began this channel, and I would say it often and often there. The more I could share with you, and the more you grow as a trader. Did you see Heath talking about watching the Swiss franc as the equity markets are selling off? Is this something that we need to be concerned about or not, right? If I could help everyone grow just in collective knowledge, then it becomes this like perfect loop where everyone else is helping and increasing my game. This is therefore how we conquered the markets, right? So anyway, 30-year, you can see it rising into some really strong resistance. If it breaks out over here above that resistance, we could go higher and quickly. Like let me come back over to the resistance. If we break this is the 10-year, not the 30-year, coming into resistance also. 30-year, the longer end leading the way, is breaking about resistance. This could unfold quickly, and if it does, what I'm saying is the Fed is going to have to come in, and they're going to have to say, okay, yields can't rise above this particular rate. They've done it before. They're going to be doing it soon. It's a question of when that's happening. Let's skip over to oil real quick, as oil's testing a multi-year trend line, a breakout, the hour of mercy. Oil testing this multi-year trend line. Look at this chart over here shared inside the Discord group. I don't normally generally share stuff shared inside the Discord group with all of us here publicly, but this one's important, and it's important for what's unfolding in this whole macro view we're looking at. You could see oil. This is a weekly chart going back to 2008, the last crisis, and you could see this massive wedge pattern that has formed, and we're breaking out to the upside. We are breaking out to the upside. If you're following it from a swing trader's perspective and you're following this channel, you know that how we've been tracking this, right? Let's go back and look. This is gold. Oh, we're going to talk about gold in a second. Or in a little bit. This is going to be good. Actually, we'll stop right here before I go back to oil. And you could see gold right now. Massive bull market. Pulling back over here. Consolidating. This is the pattern that we looked at on the S&P, on the indexes this morning, and we were saying they were getting ready to break out. They were still below the resistance over here this morning, trading somewhere around 38.77, and we said equities are getting ready for their next leg up. Now, we don't know when that was going to be. We didn't know until we came into this trend line, but we sure knew as we were coming off this resistance, it was time to pay attention. Do you remember what we shared at that time? It's right over here. In this video right now, we're going to take a look at the stock markets. We're going to ask the question, are stocks ready to correct over here? What that means, how far they could correct, what might be causing that. We'll take a look here, starting with the S&P. There was something I wanted to show you, which is why I clicked on oil. I stopped over at gold, all right? And then I'm back over here on the S&P 500, back on the real, I'm putting it all together. Just want to be very consistent about this, by the way, when we talk about gold and silver, that I expect silver to outperform, as we were just looking at this on the daily time frame over here. But gold and silver both getting ready here to break out as they've been consolidating. We saw that pattern unfolding this morning on the S&P 500, right? We saw it unfolding on the Nasdaq. It's something that we watch and watch often. We were ready for this. We were ready for this breakout over here. We were looking for the next leg up. We're not looking for the markets to crash. We have consolidated beautifully, and we're getting ready now for our next leg up on the equity markets. This is what I wanted to share with you. This is what I really wanted to share with you. There is a long way to go to maximum employment. All right, keep this in mind. The Powell is saying he believes it's going to take about 3 years for there to be any type of inflation, 2% inflation. And he says it's going to take not only does he think it's going to take 3 years, by the way, by 2023, we have the digital dollar ready. By the way, since we bottomed out over here, since the market crashed, I told you I don't think there will be another crisis. Everyone, when are we going to see the next crisis? Like, are we going to go ahead and have insolvency crisis? Are we having an insolvency crisis? And like, when are the markets crashing? That's not happening. We were very clear why it wasn't happening, and I don't think it happens again, because if you know this crisis was like purposely caused. The Fed started tightening rates. It was back in 2019, December of 2019, Paul Tudor Jones, as the Federal Reserve tightened interest rates, he said, no, I'm sorry, I apologize. December 2018, the Fed raises rates. Paul Tudor Jones says they just made a mistake. They'll never be able to tighten again. And what he means in this cycle, that rates were going to basically go down to zero, which they did. And that was a big deal for Bitcoin. That was that happened right over here. Did you see this massive jump in the second cycle for Bitcoin off its 15-month to next halving accumulation low over here? But you see this massive jump over here? Price went from like 3,200 and then went to 14,000 relatively quickly. What had happened over there? Now that's something that occurs also in the first cycle. You could see as you get towards the bottom of the accumulation low, you could see this big jump. Price over here, I don't know what it went from. I'm not sure. I don't have the exact levels to tell you, but you could see the exact same jump at the same exact time. It just wasn't to the same degree. But what was happening over here is that the Fed actually made a mistake. The Fed lost control of the system. The Fed raised rates, causing a problem that unfolded not too long after. What was it? About, I don't know, a year after, as we got into 2019, as we got into September of 2019, when we were having massive problems in the repo market and the Fed needed to intervene daily, billions of dollars. This was the first warning sign. I texted my family and I told them, something's broken in the system. It then took a while to unfold. It went through the end of December of that year. The Fed had to continue their repo actions. They weren't able to stop. There was a problem in the system. Dollar milkshake theory really happening with this shortage of dollars. And then what happened was, all of a sudden, in January, they had to continue even though they were supposed to stop. And then we had the pin that popped it. The world went on lockdown. No one knew what that meant. The world economy had never gone on lockdown before. There was fear all over the place. And the Fed jumped in. They had their excuse to deploy their QE. But don't worry, it's deflationary. Now, as the Fed is watching inflation get out of hand, we could say that inflation is out of hand right now. They're still saying they're trying their hardest to meet their 2% average inflation target. As people all over tell you, it's deflationary. Look, he's not going to stop. Obviously, they're not using an inflation target. They know that there's inflation everywhere, right? They're going to now use employment as a way to know when they're going to stop their easy policy, because they're never going to stop their easy policy. They're never going to stop this ultra easy monetary world that we live in today that was caused by the crisis, as QE purchases will continue at a rate of $1.4 trillion a year. The Fed is in no way taking off. If anything, they're going to have to add more. It doesn't look like they have to add more, because it looks like not only is the government coming here, stimulus here and stimulus there. Let's see what develops. But we're looking also at the virus really in the United States being really subdued by June. And that's not even because of the vaccinations. A lot of the population is getting vaccinated. That's obviously going to help. But what you're seeing is even without the vaccinations, that drop by all models are showing that. What does that mean for the economy? What does that mean as the economy's juiced up and you're going to start seeing people return to work? Are they going to be able to meet maximum employment? No way. Never again. Never again. It's impossible. And guess what? Technology is uber deflationary. You do have deflationary forces. You do have demographic forces. But technology, it just eats everything to make it more and more efficient, including redundant jobs. So you're never going to return to maximum employment. The Fed is going to continue easing. This is, by the way, like primo conditions for Bitcoin. Right? This, again, the first cycle, Bitcoin was obviously had a tiny market cap. A tiny market cap, but nevertheless, for the amount of, it also had a tiny amount of participants in it. It not only had a small market cap, there was also a tiny amount of participants. Today, the adoption is enormous and growing exponentially. That's what's happening over here. We had super easy, we had QE going on over here, and you saw how Bitcoin just took off. So what does that mean? Why is Bitcoin trading down today after Jerome was just like, nothing to see here, Powell? Jerome, there's nothing to see here, Powell. Yeah, some assets are inflated, but like, yeah, we can't meet our 2% target though, right? Maybe in 3 years we'll be able to do it as we introduce the digital dollar. All of a sudden, guess what? The Fed's going to cause another crisis. Yes, the Fed is the one who caused the last crisis. Right? The Fed and their artificially low interest rates causing the boom in the housing market, that caused the housing crisis. Did the Fed cause the dot-com crisis? When did the Fed tighten? Right at the top of the dot-com mania. Super easy monetary policy, dot-com mania, the Fed tightens, it all pops. There's always a reason. It's orchestrated. You have to figure out what they're deciding to do and make sure that because the only thing that matters is the main signal that we're focused on. Signal, signal, signal. The signal that I give you loud and clearest is what the central bank is doing. And I gave it to you the earliest. The fact that Bitcoin is unchanged on the day and is not reacting, Bitcoin trading at $48,892 is irrelevant. What's relevant is focusing on this. It's focusing on the cycle where we are right now. We're just midway. We got the most room yet to go of this bull market phase. It's going to end going vertical. Yes, it is going to end. This time is not different. A market is a market. I've been there. I've seen that. It's going to end in speculation. It's going to end with an enormous blow off top as it's happening, and we exit and then prepare for the bear market. Right? Why is Bitcoin trading down? Does it matter? That's just noise. That's just noise. Bitcoin was already pulling back. It's in the midst of a pullback, a 24% pullback, just coming off a 30% pullback. It's all super healthy, right? If you focus on what signal is, that's a super uber easy monetary policy by the Federal Reserve. As Bitcoin is in its bull market phase, pull yourself back a little bit. Think Bitcoin's trading at $48,000. How much longer do I have that opportunity to pick up Bitcoin under $48,000? Where it's going, what type of price, that's irrelevant. Knowing markets and market participants. Let's look at some charts. Let's look at the dollar index. What's the dollar doing? This is the Bloomberg dollar index, not the DXY that you normally see me tracking. But as the dollar on the DXY is sideways, as every session that I've been telling you for the past, 6 weeks? Going into the new year, I've been telling you the dollar went range bound. It's trading sideways. It has done everything we've expected to do. But it's going sideways. Look over here at the Bloomberg dollar index, also trading sideways, getting ready to break down. We'll see. Crude, this is WTI in that uptrend. We've talked about a couple of times this week, or once this week, early on Monday. We were speaking about how everything had changed here after meeting my final objectives on target. I'm breaking out over here from $40, right? Way early on that. Do you remember that? This channel that we were watching over here? When we broke out of that channel, targeting up over here. As soon as we met those objectives right over here, the final target, we put pushing your trades. Pushing your trades. How many people took profit on this trade right into 41.60? Anyway, pushing it. And then after we broke above my final target, I said, now, okay, we opened up a new leg over here. Now we could play again to the upside after this resistance was broken. After breaking that resistance, confirming into support and resuming up. On the upside, I showed you how this opened up a much higher target. Now looking at this work over here, though. Again, this is the crude oil, the wedge, the giant wedge going back to 2008. That looks like, what does that look like to you? What are we targeting here? Are you targeting now $100 oil? $120 oil? What's next? What's going to unfold in 2021? I don't know, but I know it's not the most exciting thing. But it is important to watch, as we have Jerome telling us that if they can't do it, they're trying really hard to get that inflation going. It could take maybe 3 more years to hit that 2% average inflation target. As inflation runs rampant, the Fed pretends it's not happening. Is oil on its way back towards triple digits? And is that the most exciting trade? Or does everyone here focused on signal understand the most important trade right now during Bitcoin's bull market phase, during these uber easy monetary policies, during this moment in time where corporations are stepping in and buying billions of dollars of Bitcoin? That's the signal. That's the trade I'm dialed into. Understanding the markets in their entirety. That is where I am focused. That's where we are today, everyone. What happens here next on the stock markets? It's the same thing that happened earlier before the stock market even broke out. I've been saying to you over the last couple of sessions, it's not when, it's not if, it's when the Nasdaq goes back on to new all-time highs. Everyone, have a beautiful day.